the real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai. I think you'll see an ETF in every country. You know, like in Argentina, they don't want you to take capital out of the country. Yep. So the logical solution for them is an ETF where the Bitcoin is custodied in an Argentine bank.
Michael Saylor, the co-founder and executive chairman of software intelligence firm MicroStrategy, has been a staunch Bitcoin bull since he began purchasing the leading cryptocurrency for his company in August 2020. Saylor's bullish stance has only intensified following the U.S. Securities and Exchange Commission's approval of several spot Bitcoin exchange-traded funds earlier this year. In a March interview with Natalie Brunell, Saylor stated that these ETFs have opened up a new financial world of awareness, opportunity, and functionality to the 99% of mainstream investors, highlighting their profound importance to the entire network. Saylor further emphasized his optimistic outlook during the Bitcoin Atlantis conference in Madeira, Portugal. In a powerful presentation, he made several bullish predictions about Bitcoin, noting that the newly approved ETFs could easily compete with S&P 500 ETFs. "We thought that maybe Bitcoin was a competitor to gold," Saylor remarked, "but it has actually run up the leaderboard and is now starting to nip at the heels of the S&P 500 index ETFs." He boldly predicted that every individual, household, institution, and country would eventually embrace Bitcoin, driving the cryptocurrency to unprecedented price highs. Despite some cooling excitement around the spot Bitcoin ETFs due to recent price movements, Saylor remains highly optimistic about Bitcoin's future. In a recent interview with Efrat Livni, Saylor noted that Blackrock and other issuers of U.S. spot Bitcoin ETFs have started an avalanche that will, over the next few years, spread to other cities and countries, fundamentally transforming the global investment landscape.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The ETFs are applications on the Bitcoin network. So they're securitizing Bitcoin. And they play an important role because they add value to Bitcoin and they solve the following problems. They make it more convenient to buy. If you're a 70-year-old retiree, you can pick up the phone and say, I want 10% of my assets to be in Bitcoin, buy it over the next week at the average price, click. 7 seconds, one phone call, done. And the person that took the phone call, they get compensated, the accounting systems work, the risk controls work, the compliance controls work, you don't have to wire any money. You might even be able to borrow the money to buy it. You can buy it without putting any cash down. You could have $1 million of Apple stock, pick up the phone and say, buy $100,000 of Bitcoin, and then your broker would loan you the $100,000 from the Apple to buy the Bitcoin. And you end up paying 5% interest to buy something that's generating a 50% yield right now. So it solves the credit problem, the convenience problem. It also solves the custody problem. You know, you don't have to worry about who the custodian is. You don't have to negotiate a crypto exchange agreement. You don't have to negotiate a custody agreement. You don't have to figure out how to move the Bitcoin. You don't have to master the Bitcoin network. You don't have to worry about all that. So it's much simpler. And then the other thing it solves is accounting and reporting, because all of your financial statements are all integrated, and people oftentimes have been doing business with the same bank for 30 years. And so everything is in one line and it's all properly calculated. And if I buy Bitcoin in 18 different days, I've got 18 different bases, and they keep track of the bases. And at the end of the year, if I have to sell something, or if I gift it to my, children, and they get the tax accounting right. So it solves all the accounting and all of the reporting issues. And those are all really critical. But the other thing it solves is the compliance issue. Compliance and capital control. When the ETFs were approved in the U.S., there was a whole set of institutional investors like pension funds and hedge funds with $50 billion, $100 billion, $200 billion. They have a lot of capital, but they could only buy through the ETF.
Right.
Even if they wanted to work for a year to set up all these other systems, they're not allowed to. Their charters prohibit them. So they've got a compliance problem. And then what happened is an ETF launched in Hong Kong. Well, you can imagine if you buy Bitcoin in that ETF in Hong Kong, that Bitcoin is not being custodied in the United States. The Hong Kong financial system prefers the assets to be custodied at a regulated bank in Hong Kong. So if I'm a Hong Kong investor or a Hong Kong institution or a Hong Kong company, I could funnel money into Bitcoin via the Hong Kong ETF. Now the rumor is that there'll be ETFs in mainland China. Those ETFs will come to you via a Shanghai-based financial institution, and the Bitcoin will be custodied in a Chinese mainland bank, maybe in Shanghai. There's 1.5 billion people in China that want to buy Bitcoin. The Chinese government doesn't have an objection to them getting rich. It doesn't have objection to China getting rich. They all like money.
Yep.
They all like wealth. Their objection is they don't want people to take more than $50,000 a year in capital outside of China. Yes. So if you buy $10 million of Bitcoin, put it in a hardware wallet, and leave the country, you violated the capital controls. But if you buy $10 million of Bitcoin via an ETF in Shanghai, and the Bitcoin is then purchased by the exchange and custodied in China, the Chinese banking system benefits, the Chinese currency benefits, the Chinese culture benefits, the Chinese government gets their taxes, the Chinese investors get Bitcoin.
According to Saylor, any country that wants to prevent its citizens from investing outside its borders will be compelled to embrace the Bitcoin revolution. He cites examples like China, the UAE, and Argentina, where pro-Bitcoin President Javier Milei has declared a free competition of currencies, including Bitcoin, to return monetary power to the people. Milei, who identifies as an anarcho-capitalist and liberal libertarian, views Bitcoin as a potential solution to Argentina's chronic economic difficulties. He argues that Bitcoin scarcity will curb the inflation tax that governments use to impoverish citizens globally. Milei's government recently introduced a bill to remove tax declaration obligations for cryptocurrency investments. Reports indicate that Argentina has started discussions with El Salvador, sparking speculation that it could be the next Latin American country to adopt Bitcoin as legal tender. Some sources believe Milei and El Salvador's President Nayib Bukele are planning a radical regional revolution to establish Bitcoin as a new common currency, capable of competing with the dollar and strengthening their respective economies. Saylor believes spot Bitcoin ETFs will play a major role in this revolution. Here are more clips from Saylor's interview with Fenigson, where he delves deeper into these topics.
The real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai.
So you
or
think
Abu
we're
Dhabi.
going to see that avalanche continue?
There's already 34.
Wow.
34 holding more than a million Bitcoin. So I think we'll keep seeing a spread. I think you'll see an ETF in every country. Like in Argentina, they don't want you to take capital out of the country.
Yep.
So the logical solution for them is an ETF where the Bitcoin is custodied in an Argentine bank. But as that happens, you see what's going on is when the Chinese buy billions of dollars of Bitcoin, they'll drive up the price of Bitcoin in New York. Well, so they're just one more application. ETFs are an application, companies on the Bitcoin standard are an application like MicroStrategy, and Cash App and Strike and other mobile apps, they're an application. And the crypto exchanges like Coinbase and Binance, they're an application. And eventually people will build it into their mutual funds, build it into their pension funds, build it into their insurance plans. More applications. Each application wants Bitcoin. Each application slips the Bitcoin because they want capital, because we call it capitalism, because these are the capital markets. Every company needs capital. We build a civilization on capital. How much? $400 trillion of capital? There's $900 trillion of wealth in the world. At least half of it has to be pure economic energy or monetary premium. The world wants capital. Everybody needs it. Every government, every school, every institution, every charity, every religion, every family, every company, they all need capital, right? So Bitcoin will just spread as an asset to capitalize on. It is kind of the ultimate monetary union. It's a cooperative bank in cyberspace. Everybody that joins makes the network more powerful, drives up the value of their assets, and the more people that join, the more power they all have. Just like you have a union, if every worker in the country joins the union's pretty powerful. If nobody joins the union, there's no point in being in the union. It's like, here's the big idea. What if we created a union, but we put our money in it instead of our labor? It's not a labor union. It's a monetary union.
In other news, Greg Foss is back. Earlier this year, the popular Bitcoin strategist and former credit analyst announced he was taking time off to deal with personal issues. It seems Foss is ready to step back into the fray and remains as bullish as ever on Bitcoin. In a recent post shared on social media platform X, Foss drew a comparison between Microsoft's stock price in 1992 and Bitcoin's price today. He noted that Microsoft was trading around $2 per share in 1992, a time when he was working on a consulting contract at the Bank of Boston. Foss was surprised to see the relatively smaller bank using Microsoft software like Excel and Word, while Canada's largest bank, RBC, where he had previously worked, was still using older programs like WordPerfect and Lotus 123. Despite the superiority and ease of use of Microsoft's programs, the larger bank was stuck in its old ways. When I returned to Canada after my 5-month contract, Foss recounted in his post, I told everyone to buy Microsoft. Lotus 123 was private, and you couldn't short it, but my thesis was that Microsoft would dominate the landscape for spreadsheets. At the time, Microsoft's stock was $2 a share. 30 years later, it is 225 times higher. Bitcoin is in the same position today as Microsoft was in 1992. Don't overthink it. Own Bitcoin and hodl. A key takeaway from Foss's story is that large institutions that are currently skeptical about Bitcoin and spot Bitcoin ETFs, like major wirehouses, are still clinging to old, boring stocks and bonds. However, they will eventually embrace Bitcoin when its price is much higher than it is today. Please share your thoughts on Michael Saylor's interview and Greg Foss's story about 1992 Microsoft and 2024 Bitcoin. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.